Alright, this is going to be a video over August the 5th, 2021. As always, if you have any questions, just ask them in the comments. So, we had a two-legged sell-off on the prior day, testing the lows. On the open, we got, well, let me kind of do an overview first, and then I'll talk one bar by one, because otherwise I'll take too long on the individual. So what did we get today? Basically, we got a channel that's slightly sloped up and strong breakout into the close. So we had a low, and I'm going to start kind of drawing the evolution of how this works. So at this point, this is kind of how you view channels. Tight channel. And we broke below the trend line, so the channel became more like this. And we went to here, we broke below this trend line, now we broke below it again. So, one way to look at it is you could draw it like that, you could draw it like this. And my point behind this is eventually you start to say, okay, we're getting higher lows, and we have a high, double top, lower high, and eventually you start to get a bear channel. And the bear channel starts kind of forming that. Here's this, here's that. But long story short, it becomes, however you want to draw it, a triangle or a trading range. And it becomes 50-50. So that was kind of in reference to the prior video, but either way, it's trading range. If you want to look at it real simple and not overthink it, trading range, sideways. And we had a tight range here, tight range here, tight range here. And eventually, the character of the market changed. Many bull bars. We got to the high of the day here. So let me do it like this. To the high of the day here. Bull bar, but many consecutive bars. Most traders will buy. I wouldn't sell right here. And you got that. So you got a little pop at the end of the day. So let's take it kind of more individually. So first bar of the day, breaking above this high around 130 on the prior day. It's probably going to fail. It's trading range, and I do expect to break out up or down. However, we don't know where it's going to be up. Consecutive bull bars, is it always in long? Maybe. You probably can buy and put a stop down here, but it's forcing you to buy at the top of the market. So you have to be careful because we could have something like this. And this is my point about channels, is support and resistance always acts the same. And at this moment, we're breaking above a channel. We could very easily get a bear bar closing on its low that just sells off, and maybe gets a bear breakout. It's possible. Now, it's also possible that you wouldn't draw it like that. I mean, really what you would do if you want to be real literal about it, just so I don't confuse anybody. Here's your channel. Maybe I draw it like that. Take a parallel and I say, okay, here's the top of the channel. Maybe it's here. We're clearly breaking above that. So maybe the top of the channel is here. So maybe it's up here. And you can see testing it and trying to fail right there. Again, the main thing with channels and support and resistance, remember that all support and resistance is the same. So 4400, important magnet. So is it always in long? I think so, but I don't know how much higher we go. So now we have you call it opening reversal, disappointed bull spot, disappointed on this bar, and basically took profits here. Some bears will scalp out here, some bears will sell betting that we get a new low of the day and some sort of channel, continuation of a trading range. Others will wait, didn't trigger, breakout, so kind of call to wedge 1 or 1, 2, 3. Some bulls do want to see follow through. Others could argue that this wedge, 1, 2, and 3, we could get a bear bar closing on its low. voice is getting a little hoarse, so I apologize. And there's the follow through. So it's a micro channel really from the whole day. So that's another important piece. 1, 2, 3, 4, 5, 6, 7. 7 bar bull micro channel. Makes me think the first reversal down is going to fail. Inside bar. And there you go. So is this going to be, is this a reversal? Could be. It's a micro channel, but again, it's trading range, and that's more important. And there you go. So bulls made money buying here, buying lower, but this is very weak price action. So now a high breaking above these highs, you can call it, more. No, it's kind of a bigger wedge, 1, 2, 3, but you have to ask yourself why this many bull bars. Probably means the market has to go sideways more. We also haven't touched the moving average in many bars. Bear bar. But again, we have an 8 bar micro channel, so we have a 1, 2, 3, 4, 5, 6, 7, 8, 9 bar micro channel here, 8 bar micro channel here. But as strong as the bulls were, the bears were able to make money selling here and selling higher. Close the gap, 2-legged pullback, but again, it's fairly disappointing. Now, you're forming a tight trading range, 2-legged pullback here. Do traders buy above this or buy this close? Probably not. You can, but again, my problem is a few things. And you'll hear Al talk a lot about this, and it makes sense. But one thing you have to think about is the moving average. What's the logic behind a moving average? And if you really just keep it simple, a moving average is just a average price of an input. So if you use an exponential moving average, it's an average of the past 20 bars. So I have a 20 bar moving average on here, and what you'll see is this moving average measures the past 20 bars. So ask yourself, is these bulls, these traders are buying above average price action because this line represents average. So if traders are willing to buy, why are traders willing to buy above average? So why are traders willing to buy above average so much? Well, that's important to ask yourself because, again, this is a strong trend. This is not such a strong trend. So just a little tidbit for you. Second entry buy, some bulls will buy, but again, tight trading range, forcing you to buy in the middle. Could be a trap. And now we're getting highs, lower high, bit of breakout, maybe a wedge, 1, 2, 3, but very tight channel. Second entry buy, but again, very tight channel. So, I don't know. I wouldn't be thrilled about buying here, but you can. I'd rather wait. Okay, now we're starting to get bull bars, consecutive bull bars. Bull bars, do you buy here? You probably can, but forcing you to buy in the middle, it could be a trading range. And what do you notice going on here? Well, what you notice is you're getting a lot of bull bars. So a lot of traders would not want to buy above this bar. I wouldn't. And the reason is how tight this channel is. So if you don't want to buy here at support, what happens is you got to buy somewhere. And you don't want to buy here because it's close to the moving average. You don't want to buy here because, again, it's close to the moving average. And the price action is not all that appealing. You really want to see a bull bar, like this. So a huge bull bar closing up here. You want to buy something like that. But when you start to get this, you say, might fail. Didn't close on its high. Again, didn't close on its high. Maybe it's a wedge. But the problem is it's microchannel. 1, 2, 3, 4, 5, 6, 7 bar microchannel and only 1 bear bar. It is a breakout on a higher time frame, and the bulls are controlling the market in terms of time, not necessarily price. So that's important. And eventually, you'll have some traders who are selling, scaling in higher. You have other traders you have bears who are trapped in, who will use any bounce to avoid a loss or limit their loss as much as possible. You have bulls who are trapped out. They, maybe they didn't want to buy here because of this, so they're looking to buy. And they wanted to buy a second entry. I know this is a first. This could be a second entry. Some bulls will wait. And the problem is, it just keeps going up. So, all the way up to there. Now, here's one thing I want to be very careful about is I don't want to give too much attention to swing trading in this environment. This is a trading range. I mean, let's just blow the bars up. Here's today's range. Better yet, here's a 15-minute chart. Does this look appealing? Is this going to be let me do it like this. The point I'm trying to make is, again, I'm sorry, my voice is getting tired, so I'm going to have to quit this video in a second. The point I'm making is this is a very boring day, and you just have to be careful. And don't sell too low, and just as strong as this is, don't be too convinced that you're going to get the successful breakout, because you may not, and you could easily reverse. And this could easily be a lower high and some sort of bear channel. It could easily be a lower high and a triangle, just like this. And to prove that, or to show that is a better way to put it, here is the apex of this triangle. This high, this low. If you want, I'll say that this is the low and I'll just draw it like that. But no matter how you look at it, it's the middle. So triangle always goes to the middle. We're clearly in the middle of this triangle. And we quickly, get in the middle, 50-50 chance in general. You break to the downside, 50-50 chance you break to the upside. We just happened on this one to break to the upside. It was, 2 legs up, 1 pull back 2. First leg, pull back, second leg. And we just raced up the end of the day. And you could take that a step further and say, oh, well, that was obvious that was going to happen because it's continuation from this move. And if I take this low, and maybe not to there, but I'll take that low and put it at the midpoint. So anyways, I don't want to keep going over today. Pretty boring. Hope this video helped.